Hello and welcome to our favorite security token show segment, now doing interviews. Absolutely honored to have both Jeff Vier, who's the Senior Director of Tokenization at Republic, as well as Morgan Krupetsky, who's the Head of Institutional at Ava Labs. Both here on the show together about a huge announcement we just covered on the show regarding the Republic Note and selecting Avalanche as a blockchain, the underpinning technology to power it. This may be a whole lot of nonsense for anyone who's never heard of the Republic Note. We've obviously been tracking it for a long time, but please, Jeff, maybe just give us, for those of who are new to the scene, give us a take on what the Republic Note is before we dive in.
Yeah, thanks. And thanks for having me, Herwig. Always love joining and being part of the STG family. So a little background on the Republic Note and Republic. So Republic was born out of the Jobs Act in 2016, which was regulated crowdfunding, which is a way for private businesses to sell, stock in their business to accredited and non-accredited investors. The Republic Note is effectively an index of all of the investments that Republic has taken part in over those years, 7 odd years, and as an index of all of the offerings that have been conducted on republic.com and part of those CF offerings or crowdfunding offerings.
How many offerings is that? Do you know? You have a rough number?
Oh man, it's been thousands of offerings and hundreds of tens if not hundreds of investments from Republic in our capital arm, and a little bit more about the Republic Note and how it's constructed. But we look at this asset being digitized or tokenized as integral into its being scalable. So the idea behind the Republic Note is that we wanted an asset that was functional for people to self-custody if they were so willing to. That's a big ethos of ours. Like, can someone actually custody their own digital assets? There's onboarding to crypto, and then there's onboarding to private keys, and we actually wanted to accomplish both. It's a big mission of ours. We also needed an affordable way to deliver dividends to token holders. So all these assets actually will be dividend bearing, and tokenization is really a way for us to do this affordably and in a way that is programmatically restricted, meaning it's programmatically regulated, it's programmatically acting legally in the way that we're distributing dividends. And that's actually something that a lot of people get wrong when they're talking about tokenizing assets and doing things on blockchains. It actually makes it much easier for us to control.
Republic is one of the, if not the biggest crowdfunding platform out there. And you guys have been very, very forward thinking about blockchain for a long time now. And now you're putting your money where your mouth is. And you clearly just described some very strict parameters. You take this very seriously about, picking the right technology to be able to power all of this. So, let's get into Morgan a little bit. Let's talk about Avalanche real quick. I'm sure it wasn't necessarily a quick and easy decision. Maybe let's turn to Morgan, give us a quick introduction, just in case for anyone who's not familiar with specifically Avalanche's focus on-chain finance.
Sure, I'm happy to go into it. And again, Herwig, thanks so much for having us on, and I'm happy to go into Avalanche and kind of the background and why we think it's ideal from a tech perspective for tokenization and on-chain finance, although Jeff does a much better job, and it means so much more coming from a partner in terms of kind of informing what led to that decision. But for those who might not necessarily be familiar, Avalanche is a layer 1 blockchain of blockchains. It is EVM compatible, it's smart contract enabled, and really is powered by the third ever most novel consensus mechanism called Avalanche Consensus. And the so what of that is that it's extremely fast. It enables sub-second transaction finality, which is important, but is particularly important for financial services use cases. And when you're talking about kind of value intensive transactions, it just becomes that much more important. And the second big kind of differentiator of Avalanche is really its customizability across a whole host of different parameters. And really the reason why a lot of our partners, whether they're financial institutions or gaming companies or governments or other types of enterprises, really the reason why a lot of those partners ultimately choose to build on Avalanche. So, happy to have Jeff kind of add in as well. But I think for us, from our perspective, tokenization and on-chain finance is really something that we're focused on kind of driving forward, in terms of really kind of upgrading legacy infrastructure and institutional workflows and ways of working, and really using a combination of blockchain technology, tokenization, and smart contracts to really kind of drive forward the future of finance in those respects. And I think for us, from an Avalabs standpoint, why we really got excited about kind of partnering with Republic on this initiative in particular is, I think, it was mentioned earlier, Republic is really born out of this idea of, we say it a lot, but really the democratization of finance as enabled by Reg CF. And so a lot of the tokenization initiatives today really focus on, the ability for accredited investors to have access to private market investments. Here, it's kind of even expanding it further beyond there and really using Reg CF to enable an even greater number of investors at much lower investment minimums.
That's the gospel, as I like to say. We all know exactly, at least hopefully most of us know, what Avalanche is doing in the space to advance that legacy transformation. Jeff, maybe you can give us a little bit more insight as to exactly, what were the biggest things you were looking for? Was it that affordability? Was it the ease of development? Is it the community? And then the support that, the large finance, network that's joining Avalanche. What was the biggest decision maker for you?
Yeah, I think you probably said it there in pieces. Morgan already touched upon, the speed and finality of the blockchain. She also touched upon the customization ability or customability with the blockchain, and more importantly, its subnet ability and the ability to build effectively your own blockchain using their network's infrastructure. All of these pieces are extremely important to us. We need to, as we have always, act extremely above the board when it comes to regulation. So we need to have the ability to, at a protocol level or a blockchain level, program the restrictions and access and settlement with the network that we use. So that checked that box in a big way for us. Another piece that is really important for us when it comes to working with Avalanche is mission statement. And proactivity versus being passive about this. Avalanche, has a mission to tokenize the world's assets. That's very important to us, and it means that they are actually driving on that track. They've never really lost gaze of that goal. And it's important for us to kind of align with a protocol partner that's going to help us also achieve that goal, right? So you think Morgan or Herwig, you both mentioned democratization of finance, and that's a big role that we are hoping that we can play inside of the greater Avalanche ecosystem. What they're building with institutional tokenized finance or off-chain assets, we're hoping that we can do that for the everyday investor and especially to the non-accredited investor who wants to take part in some of these opportunities. I would say that those are the biggest pieces for us, atop the technology being very, very capable and needing or being capable of doing what we needed to do from a regulatory and programmable perspective.
I have so many questions that I want to start getting into. I don't even know where to begin when it comes to sort of the next phase of this project. I know currently that I believe it's not yet live on the mainnet. So I assume what does the next steps look like? Maybe any insight to timing, so that when you do go live, what'll be the biggest, advantage to, being live? Is it still just sort of, okay, we can now see it and we can kind of see any kind of information happening between tokens, or are we going a step further where maybe you plan to list it somewhere, or plan to leverage some of the different, financial services, if you will, that support Avalanche-based tokens like INX maybe?
Right. Yeah. And there's been a lot of promise over the years for, I think, fairly misunderstood terms like liquidity when it comes to tokenization of assets and what makes an asset liquid by putting it on a blockchain. For the next steps for us, the note is, well, for starters, it is an on-chain asset. It has been mainnet deployed, so I can be the first to announce that. The asset is on-chain. It's just not a token contract address that we're making public, or it is publicly explorable, but something that is public currently. It's also going to be integrated into the Republic wallet. So on Republic, we have the native wallet of the entire platform, which a lot of people don't even know exists. Definitely get over to Republic, create a wallet. It's a self-custody experience, meaning that you are actually going to be the custodian of your digital assets, which is very, very important, again, and powerful for us to be able to offer to all of our investors on the platform. Our token note investors will be able to take custody of those notes inside of their wallet. And then the strategy here long term is that this asset will list on an ATS for secondary trading. So that, that is taking this asset from, through the entirety of its life cycle. And yes, we are looking to, INX to be, the main proponent in listing that asset. They've become a strategic partner of ours with our kind of investment into them earlier this year. And that is the full life cycle intent of the asset. So take receipt from the Republic wallet, go there right now, create it. You'll also be able to take receipt of other digital assets there and other offerings that are going to be on the Avalanche blockchain, which we're really excited about. And all of those offerings, the ones that are able to be, will be listed on the INX ATS for secondary trading. And that's when we start to, complete the lore of liquidity for tokenized assets.
It might Jeff, only just begin. Go ahead, Morgan.
I would just add a couple of things, or maybe kind of highlight some things that you mentioned that I feel like shouldn't be taken for granted. I mean, the listing, ultimately stay tuned for that. But otherwise, even just the dividend distributions via potentially stable coins or others, I feel like that shouldn't necessarily be overlooked just in terms of kind of the ease of transfer of those proceeds. And then in addition, I think something else that I would kind of highlight, like the note's been out there from a private sale perspective for a while. And so this isn't necessarily just a case of we're announcing that this thing exists, but we're announcing it in the context of there's already tens of millions of dollars of the note that have been already subscribed to. So given Republic's kind of standing in the broad-based ecosystem, they have more kind of Web 2 roots in the crowd investing side, and are definitely moving to become more kind of crypto or blockchain native. But they know what they're doing as it relates to go-to-market demand and distribution. They have over 2.5 million KYC users already, and so it's definitely not a case of you announce something and there's nothing necessarily on the other side, but there's already a whole kind of community that's been kind of subscribed to the note in the first instance, such that when ultimately it is available on the secondary market, inherently you'll already have kind of supply and demand on the back of that.
Yeah. Morgan raises a pretty important point, something we talk about quite often, and that's distribution. I would say like 90% of the time when I'm speaking to an issuer or someone who's trying to develop a security token, their real intention is actually distribution. We've already crossed that first line, and we've already we've already accomplished the distribution piece, and now it's like the chariots are at the ready. We're ready to actually build a market with these. and use it as an example for how we're going to continue to build markets with digital assets going forward. And then on the dividends piece, just very quickly, because this is all on chain, it makes it very, very simple for us to, and at a low cost using the Avalanche network, deliver dividends by way of stablecoin and map those to the token holders wherever they may be, whether that be at an exchange, whether that be on Republic using the Republic wallet.
I think that's one of the most fascinating features that's under talked about. I mean, if I remember correctly, I know there's over 700 portfolio companies, if you will. I mean, so let's talk about a little bit in the details of how do those distribution work. So is it when a company is actually returning part of their distribution from the portfolio to you that you then pass it along to the note holders? Is it when there is some kind of an exit in the portfolio that you then take those proceeds and distribute it? Just again, for those who are not too familiar with the mechanics of the note, can you just give us a little bit more insight as to how those distributions are actually happening through the life cycle?
Yeah, so it's actually quite an elegant design, and I would encourage everyone to go to republic.com and learn about the note. But the note will be making distributions based on a design where the value does not exceed a certain amount. So in order to make an asset like this available to the investor classes that we have, that those assets under management or that index of assets cannot exceed a certain value. So that gives us directive as to say, like, hey, we are approaching the value cap of this index token, right? The Republic note. We need to make distributions off the top of it. That's going to be done at the discretion of our asset management team, and it won't be necessarily directed by individual assets within the portfolio having exits or having earnings where they have profit distributions normally, but rather the entire value of the assets under management inside of the Republic note and the total value of that portfolio, call it.
And Jeff, you mentioned this earlier, but the white paper that you guys put out around the note, I think, is really informative. So I don't know if we can maybe distribute this or link this on the STM website, but I thought that was really helpful as well.
Yeah, definitely. We could add that, and I'll also say that I've been with Republic for a little bit of over 2 years now, and reading that white paper for the note was one of, if not the main driver for me to come on and help to build towards this kind of next generation of security token offerings.
I mean, I geek out over this because this is not necessarily, it's rather unique, right? It's a more advanced structure in the first place when it comes to investing into startups, and it just leverages tokenization to the absolute max in every regard. I imagine that one day you're probably encouraging your portfolio to also tokenize and hopefully be able to distribute as you harvest from the portfolio, that they're able to also send it to you on chain. And from there, it's just a smooth all the way through in and out, completely on chain process, which I think is absolutely awesome. Huge news about, of course, the fact that for those of you who don't know, Republic, you can now go get yourself a wallet. It sounds like you can support potentially all Avalanche-based assets in that wallet. Is that right? As well as many others, I assume.
Yes. We try to maintain an agnostic approach just for much more inclusion. Market-wise, it's really important. We need as many blockchains participating. And yes, any offering that is conducted on Republic can be launched using the Avalanche blockchain. So if we're working with an issuer and they want to do a token versus a paper security, they can be using the Avalanche blockchain to issue that to their investors, and they can do that right on the platform, right to their wallets. It's very seamless.
That is so cool. Well, congratulations on officially being live on mainnet. I'm going to try to sleuth it and find it, but you'll let us know when we can all go check it out. But congratulations again. This is amazing, an amazing advancement for the industry in general, in my opinion. Morgan, did you want to add anything else to the conversation before we close off?
I feel like we covered a lot of it, but again, we have and continue to be kind of longstanding partners of Republic, and super excited to be working with them, particularly on the note, just because also it really represents, I think, an entire kind of ecosystem and ethos that they've been working on for a while, and so it's kind of a nice representation of that from an index and investment perspective. But thank you again for having us on, and really excited to kind of continue sharing this journey with not only the Avalanche community, but the Republic community as well.
The journey continues, and we hope to have you on again as it continues. So with that, thank you for the both of you, Jeff and Morgan. We'll catch you again next time. It's been another great episode of the Security Token Show.